charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
The sun gently fell below the horizon. Rays of pure gold filled the sky, illuminating the towering structures of the London skyline. What else could Jane do but gaze in awe? She was but a silhouette upon a hill, wrapped up in a spectacle so perfect, no words, oil paintings, or smartphone filters could do it justice. She savoured it. Before hopping back on her bike and riding off, she had to finish her commute home. Walk, cycle, discover. To the Mayor of London and TfL, every journey matters.
If your old faithful fridge freezer is broken or on the blink again, relax. At AO, we have a huge range jam-packed with the latest technology to keep your weekly favourites fresher than ever. Plus, there's great deals on top brands like Hotpoint and Samsung, with finance options available. AO.com, the online electrical store. AO, let's go! Credit is subject to status, must be over 18. AO Retail Limited is a broker and not a lender. Credit is provided by Secure Trust Bank PLC, trading as V12 Retail Finance.
People say you get what you pay for. We disagree. The Peugeot 208 Signature, loaded with features from touchscreen with Apple CarPlay and Android Auto to parking sensors and 16-inch alloys. At £199 a month with £199 initial rental, you really don't get what you pay for. You get a lot more. The Peugeot 208 Signature. All that's missing is your signature. Peugeot Motor Company PLC, a credit broker, not a lender, will introduce you to PSA Finance UK Limited. Personal finance lease. 48 months at £199, 18 plus. Guarantee may be required. Terms, eligibility and return conditions apply. You will not own the car.
Time for This Day in Sports History on TuneIn.
August 15th, 1964, Mayor Daley declares Ernie Banks Day in Chicago in honor of Major League shortstop Ernie Banks. 1989, in second start since after cancer treatment, Giants' Dave Trevecki breaks his pitching arm while throwing to Tim Raines. 1999 PGA Championship, Medea CC, Tiger Woods wins by one stroke from Spaniard Sergio Garcia.
Make your history and listen to sports on TuneIn. Just search sports today.
Welcome back. We have some breaking news on GE. Morgan Brennan with us. Morgan, what's happening?
Hey, Kelly, that's right. So this developing story on the heels of this nearly 170-page report from Madoff whistleblower and financial investigator Harry Markopoulos. We're getting now a response. We got a response from GE on this report earlier today, but now we're getting a direct response from GE CEO Larry Culp as well. He says, quote, GE will always take an allegation of financial misconduct seriously, but this is market manipulation, pure and simple. Mr. Markopoulos' report contains false statements of fact, and these claims could have been corrected if he had checked them with GE before publishing the report. The fact that he wrote a 170-page paper but never talked to the company officials goes to show that he is not interested in accurate financial analysis, but solely in generating downward volatility in GE stock so that he and his undisclosed hedge fund partner can personally profit. You may recall earlier today on Squawk on the Street, we had Mr. Markopoulos on. I actually asked him why he hadn't spoken to the company. The point he had made was that he was relying on financial statements and that based on his experience talking to the company, he didn't want to put them in a position to be able to destroy any kind of evidence or financial documentation. Nonetheless, this is the response from GE CEO Culp, and we'll continue to bring the latest as this story unfolds.
Very, very sharply worded. Morgan, thank you so much. GE shares remain down about 13% this afternoon, and we'll have more. Session low for all three major averages. The Dow had been up as much as 133 points. Now we're down by about a third of 1%, and the 10-year yield just went below 1.5%. There it is on the screen behind me. Third run down, 1.475%, and a fresh record low for the 30-year. Look at this. It's below 1.92%. I don't have any superlatives. This is the SPDR Homebuilder ETF is climbing today. Those falling rates have boosted homebuilder confidence a bit in August, but trade and the economy do remain a concern. Let's get out to Diana Olick to dig through this data for us. In light, Diana, of the moves even just this afternoon.
Yeah, Kelly, homebuilder stocks took it very hard yesterday, but they did get a boost this morning from that small gain in homebuilder sentiment. Sentiment has held kind of in a narrow range for the past 4 months, even as mortgage rates have fallen steadily. Rates are down around a full percentage point now since last fall, and builders say that is bringing buyers back. We just saw a huge jump in mortgage applications to buy a newly built home in July, up 31% annually. Now, here's the caveat. Single-family housing starts have been pretty weak this year, partly because builders are worried about the broader economy. Now, I spoke with the CEO of KB Home, Jeff Metzger, last week. He said lower mortgage rates help, but consumer sentiment moves home sales more than rates. Sentiment in housing is strong now, that according to Fannie Mae's monthly survey, but that's all on lower rates, and it doesn't figure in the latest warnings of a possible recession. Kelly?
Diana, how much more of a boost, are we looking at if now that we're getting some headline numbers here. The 10-year yield below 1.5% this afternoon. Is that alone, you think, going to spur more interest?
Now, you have to remember, though, the 10-year and 30-year fixed mortgages track loosely, but not exactly. And in fact, mortgage rates are not falling nearly as fast as the yield on the 10-year Treasury. That has to do with investors in mortgage-backed bonds. They don't love it when everybody starts refinancing because they lose money. So they're not as interested in buying those mortgage-backed bonds. So we're actually seeing a pretty wide spread now between the drop in the 10-year Treasury yield and mortgage rates. Used to track closely, now not so much. Still lower on mortgage rates, but not as low as we might have expected them to be.
That's a great point. It's going to be a frustrating one for some buyers, too. Diana, thank you. Appreciate it. Our Diana Olick. Take a look at what's been going on in markets just in the last couple of minutes. Let's begin with bond yields, where we're seeing the most movement and some major headlines. The 10-year yield going below 1.5% for the first time since 2016. The low in 2016 was 1.318%, so we're getting closer to those levels. The 30-year bond, which last night went below 2% for the first time ever, is falling pretty sharply below those levels. We're down at 1.93% today. The stock market's not responding well to this. The Dow is now down 115 points, or about 0.5%. For more, Stephen Stanley is here. He's chief economist at Amherst Pierpont Securities. You're the perfect person to break this down with at the moment. First and foremost, today's action seems to be driven by a couple of headlines from the European Central Bank. They've just told us, a couple of policymakers, they have major stimulus coming in September. Major bond buying, more rate cuts. Is that dragging U.S. yields lower today?
Well, I think to some degree, yeah, because, you look around the world and as low as our yields are historically, they're still higher than the major alternatives that global investors would have.
It's amazing that after the first headlines from Olli Rehn at the ECB crossed this morning, the German 10-year bond hit negative 0.7%. How do you explain what that even represents?
That's amazing that people would be willing to give away their money and get less in return. It's amazing.
We have the French 10-year at minus 0.5%. The Spanish 10-year was about to turn negative at the last time I checked. So for people who look at U.S. yields in a vacuum, is today's action telling us something about the likelihood of recession, about the weakness of the economy, or is it being driven by global forces?
Well, there's no question that financial market participants right now seem pretty gloomy. They're looking around the globe and they're seeing weakness in some of the other major economies. The U.S. economic data, for the most part, has been pretty good. So the U.S. seems to be holding up, but I think there's a real concern around the world about whether the U.S. can continue to do okay when other countries are suffering.
Every time we get strong data, we saw this last month when we got the June numbers, people said, no, but just wait. Well, now it's August, we're getting the July numbers, and they're mostly pretty strong.
Yeah.
Manufacturing is weak, but is that because it's been hit specifically by trade tensions, or is it telling us something about the business cycle itself ending?
No, I think it's more the former. I think it has everything to do with trade uncertainty and some of the upheaval in the global supply chain right now. The manufacturing sector is definitely lagging the rest of the economy. The consumer seems to be quite good, and I think the domestic U.S. economy is still in pretty good shape.
So you think manufacturing is lagging and not leading? Because traditionally, that's why people watch it and are so obsessed with these surveys, because it says, well, the first place the downturn would show up is in manufacturing, and then it will spread.
Right. Well, I think the manufacturing sector is just less important as an overall piece of the economy than it was, say, 20, 30 years ago. And what used to be a leading indicator, because typically cycles came around inventory cycles,
yes.
Boom and bust in inventories. We don't have that much anymore. And I think now it's more of usually the last couple cycles, it's been more financial market driven.
So final and most important question is, yesterday we had the yield curve go negative on the 2-year 10-year. Obviously, the 3-month 10-year has been inverted for a couple of months now. Is this telling us that we are going into recession within 14 to 18 months, or is it, Stephen, going to be different this time?
Well, you hate to always say that it's going to be different this time. I think it does tell you that financial market participants are worried about a recession. But I think the reality is that the economy should be in pretty good shape. And I personally just don't see it.
So how do you then explain and say, okay, well, I'm going to throw out this chart with all of this history and say, I know it's happened every time before this way, but I don't care. It's not going to happen this time around.
Yeah, I think a big part of it is what we started with, which is the force on the longer term part of the yield curve from global situation, from negative yields in some of the other countries. So I think that's an echo effect of all the QE that we saw after the crisis, and as you mentioned, from the ECB probably coming again. So I think that this time is different in the sense that the forces for monetary policy are exerting on the markets and on the piece of the yield curve that we haven't seen in the past.
So do you want the Fed to cut rates more or no?
Well, do I want them to cut rates? I don't think they should, but I think they certainly are, certainly at least in September.
Wow. And that's where we're headed. They're going to cut rates. The European Central Bank pulling rabbits out of its hat. Stephen, thank you. We'll see how it all evolves from here. Stephen Stanley is with Amherst Pierpont. As I mentioned, the Dow is selling off as these bond yields continue to plunge new lows, and people watch for the inversion of that yield curve. Right now, the 2-year, 10-year remains slightly in quote-unquote normal territory. It's the absolute levels that are eye-catching today. And there you have it again for the 10-year, below 1.5% just a moment ago. That does it for the exchange. I will go join Tyler Matheson for Power Lunch, which begins right now.
Kelly, thank you very much, and welcome everybody to Power Lunch. I'm Tyler Matheson. Here is what is new at 2 for a Thursday. Wall Street whiplash, stocks on a bumpy ride as those trade tensions with China remain on high alert. We've got the details for you. Plus, it's prime time for retail. Amazon's Prime Day creating a shopping frenzy for everyone, even rival Walmart. So can a strong consumer send us back to record highs in the stock market? Plus, electric shock. GE sinking after a Madoff whistleblower says the company is a bigger fraud than Enron and WorldCom combined. We will tell you why he says the company is heading for bankruptcy. Power Lunch starts right now. And let's check where we stand on this wild markets day. Stocks taking a dive in just the past few minutes, now down 130 points. All the major indexes reversing as the 10-year yield hits its lows of the day. And that is a sign of worrisome growth ahead. Let's go to Bob Pisani, who joins us now from the NYSE. Hi, Bob.
Hello, Tyler. Again, markets roughly tracking bond yields. Take a look at a chart we've shown a lot recently, the intraday of the 10-year versus the stock market here. We saw bond yields. We saw a sell program come through basically as bond yields dipped below 1.5% here. We've been trading practically in lockstep with those yields today. There you go. See the market here with the 10-year yield on the top there and the S&P 500 on the bottom. This is an intraday. And pretty much moving in lockstep there. I want to note two notably weak sectors today. While Walmart is helping consumer staples, retailers are continuing to get slammed today. Macy's, Gap, L Brands, Kohl's, all down another 4%. These, all of them, are down about 20% this month. Rather remarkable move to the downside. I want to highlight transports as well. Common theme here, logistics and trucking like J.B. Hunt and Ryder, and Americans like Airlines, FedEx, all weaker today. This has been a rough month for those transports. All of them take a look down double digits so far, and we're just halfway through August. Tyler, back to you.
All right, Robert, thank you very much. So with bond yields screaming and trade tensions rising, what should investors do with their money? David Kelly is Chief Global Strategist with JP Morgan Funds, and John Stolfus is Chief Investment Strategist with Oppenheimer Asset Management. David, what are bond yields telling you, and what did that very brief 2-hour inversion of the yield curve signal to you, if anything?
Well, I think the bond market is a little bit hysterical here, but it's because of a wave of money around the world that's looking for a home, and I think that's just pushing down these yields. I don't think the inversion tells us we're heading for a recession. I think it's a bit of a broken barometer. But, there are lots of other traffic lights around which are flashing orange also. And I think what's happening is the trade tensions are catching up with the market. And I think people realize it's slowing global growth, and this uncertainty does raise the risk of recession to its highest level since the 2008 debacle. And I think that's really what's going on here.
John, usually we don't import recessions from other countries, but right now there are, I forget what article I was reading this morning, a number of major countries that are either right at the flat line in terms of growth or in negative growth. Prime among them, Germany, also Great Britain, Brazil, and Mexico, Argentina. What would the transmission mechanism be for a recession to come from overseas here?
Well, I don't think it would be based on what's happening right now. I don't think you can imply that there's a recession around the corner based on what the bond market is doing. I have to agree with David. It might in some way increase the percentage chance of a recession, and you can't help but notice an amber light on the dashboard. But relative to what the bond market is doing, this reminds me of when the bond market thought yields were going to rise in the fourth quarter of last year. If you remember, we were at, 3.25 sometime in November, and we'd been in, last year we had a number of times, the 10-year was over the 3% markers. So with other countries, you've got to look at the idiosyncratic problems within those countries, as well as you have to consider what is their policy in terms of fiscal stimulus versus monetary stimulus. And usually you'll find a kind of an odd pro and negative on that kind of thing where they're not participating. In the U.S., we've got a fiscal stimulus occurring via a relatively accommodative Fed. Plus, the president wouldn't agree with that, but the Fed's accommodative. And you've also got good opportunity here if you take a look and you consider the position that we're in related to the trade war at this point isn't that bad based on the economic data that we're seeing.
David, let me ask you what you think is the catalyst for the last 20 minutes or so, where bond yields took this fresh dive, the 10-year below 1.5%, and it's back there now, in the stock market selling off more too.
Well, it's very hard to know what moves the bond market minute to minute. It's clear the stock market is following the bond market here. But overall, I mean, this is about trade tensions. It's very difficult to actually get a global recession. There are only one or two things that can cause it. One of them is a global financial crisis, and the other one is trade, because almost every other country in the world actually exports more of its GDP than we do. And that's why it's hurting countries, particularly like Germany, Taiwan, Korea, Japan. These are big export powerhouses, and they're getting hurt by the same disease right now. So this is a particularly bad illness for the global economy, and that's what's hurting the whole global economy. It is hard for us to import a recession this way, but we're doing our best.
So you think, and there were headlines this morning. I mean, the European Central Bank, David, had an official come out, Olli Rehn, talked to the Wall Street Journal about how in September they're preparing major stimulus. Is it just markets continuing to digest that?
Well, I just want one correction. They're preparing major easing. I have no idea why they think that would actually stimulate anything. Right. I mean, it's absolutely ludicrous that they don't actually look at the transmission mechanisms by which lower interest rates are supposed to stimulate the economy, because all I can see them doing is undermining their banking system. It is not working, and they should stop doing that and talk to the Germans perhaps about some fiscal stimulus in Germany, which is one area where I think a government could prudently expand its borrowing, expand its deficit, given its economic position and its debt position.
John, David does not think that the inverted yield curve is an infallible predictor of a recession, but he does believe that the odds or likelihood, the risks of recession are rising, and that it is time to become more cautious. You take the other side of this argument, as I understand it. You remain overweight U.S. equities, continue to favor cyclical sectors, which would suggest a growing economy, and you think that the defensive sectors are overbought. Explain why you say stay with it.
Well, Tyler, one thing is the current embrace of defensive sectors by many investors has been going on for months now. I think for most of the year, and within the cyclical space, you've got to consider, just suppose we get an agreement, some kind of resolution with China, and we don't propose it's going to be a heaven on earth kind of solution, but something akin to or on parallel to the SALT agreement that happened many years ago between the U.S. and the Soviet Union. this case in parallel to trade as opposed to limiting nuclear ballistic missiles. But what we think is if we get a trade deal with China, you're going to see a 180-degree turn in terms of projections and expectations, both in terms of global growth, U.S. growth.
Doesn't that feel like a big if right now, John?
I don't think so. And every day that China doesn't come to the table or can't find a point of an agreement with the U.S., what it leads to is more companies are changing their plans in terms of their trade route, moving away from the China supply chain. And when you look at that, that is a compounded effect that China is bound to recognize.
Okay.
They're very smart, and they're looking at that, I'm sure. Relative to the U.S., the president's got an election coming up. I think isn't he going to be in New Hampshire on Thursday? A lot of action here, all kinds of things preparing for that. And then on top of it, from both sides of the aisle, there's bound to be a push to drug pricing as well as taking a look at infrastructure, which are areas that voters would probably like to hear about. And they'd like to get away from worrying about, are my consumer goods going to cost me more after Christmas?
Right. Let's show the Mexican peso, if we can, for one moment. I just want to bring everyone's attention to the fact that Mexico at the top of the hour did cut its overnight rate to 8% from 8.25%. David, as we see and have seen global central banks doing this all along, what does that do to add to the bond market, global bond market rally? And does it help or hurt efforts in the U.S. to achieve some kind of policy stimulus?
Well, it hurts efforts because, of course, currency manipulation is a zero-sum game. And while, one of the only positives you could say for the U.S. cutting interest rates here is it might lower the dollar from a too high position and help our trade. But, of course, if everybody else does that, then that comes out at zero. So I think emerging markets are taking it on the chin from this. And the rest of the world is getting hurt more by this. But we need to be careful here. I think this is hurting China more than it's hurting the United States. But I think they can take the pain more. And there isn't an election in China in 450 days. There's an election in the United States, and I think they're thinking, let's just wait it out.
All right, gentlemen, thank you very much, David Kelly, John Stolfus. Let's go back, meantime, to Bob Pisani at the New York Stock Exchange. Hey, Bob.
And of course, we're still watching a market near the lows for the day. I want to point out the yields when the 10-year broke through 1.5%. We saw some sell programs come through. We have pointed out many times very close relationship between bond yields and the stock market, so we moved down. Just been calling around trying to see if there was any catalyst. I understand the Bank of Mexico may have cut its interest rates 25 basis points, trying to confirm that. That may have happened just a little while ago. That may have been a potential catalyst. Again, I'm trying to confirm that right now. But you see the 10-year yield move down. We saw very heavy volume predictably in certain ETFs associated with the bond market. IEF is the 7 to 10 year. If you put up IEF, the exchange-traded fund for the 7 to 10 year. Some of the other longer duration bond ETFs also spiked up on that news. TLT, which is the 20-year plus ETF. I saw a lot of volume going through on that. So we're getting through. There's your IEF. This is the 7 to 10 year one. You see that spike up. Now the move down. There's TLT, the 20 plus bond ETF. So all these had very fast volume here just prior to 2 p.m. Eastern time. And again, guys, just trying to track down the source of that move. It may have been nothing. There may have been just a lot of pressure on the markets overall. But I want to check that move from the Mexican bank. Guys, back to you. Central Bank.
All right, thank you very much, Robert. And Rick Santelli is tracking the action at the CME. And there has been some action lately, Rick.
Oh, there's action every day, and today's action's particularly interesting. Now, as you look at an intraday chart of Boone's, we see that they plummeted before their close. And what exactly was going on there? Well, I'll tell you what my version of the story is Finnish governor of Bank of Finland, Olli Rehn, also a rate-setting ECB member, did a Wall Street Journal interview several hours ago. And basically, I'll paraphrase what he said. He said that many may be surprised at the stimulus that's coming on the September 12th ECB meeting. You know, this follows a pattern lately of the ECB getting in front of everybody, whether it was putting pressure on Powell before our meeting. And these issues really are at the epicenter of what's going on with interest rates and foreign exchange and all of the connectivity there. So if the ECB is going to give even more stimulus at the basic end of Mario Draghi's tenure before we get new leadership, of course, then that is going to put even more pressure on the market. So what happens is speculators, institutions, much buying goes on in front of these hints about more QE, more stimulus. That brought bond rates down rather dramatically. As you see, the euro currency also followed. And finally, how does that correlate with tens? Listen, Mohammed El-Arian has said it this morning. In many respects, since all stimulus is fungible, the ECB is setting policy for many of the central banks in the world by making the first move in the chess game, and then those hints being much activity into that sector, and that pressures rates and puts pressure on other central banks to try to make sure they keep up so their currencies don't appreciate. You can see that our dollar is still firm, and that's one of the linchpins in how the counterintuitive nature of this story is the Fed tries to get ahead of weakness. What they really end up doing is losing a bit of control, not necessarily their fault, but dollar-denominated funding issues around the world, think emerging markets, keep coming back in this back loop, keeping the dollar high. I know this may sound perverse, but for many who want central bank control to moderate a bit and the markets to do more of what they do best, I think in order to see that happen, you're going to end up, whenever it occurs, seeing the dollar actually start to slip. Don't see that dynamic in place at this time.
Rick, thank you. Rick Santelli at the CME as we watch some extremely important levels in the bond markets this afternoon. Want to also keep an eye on shares of GE, which are plummeting today on pace for their worst day since the crash of 1987. Today, whistleblower Harry Markopolos, who gained fame for warning about Bernie Madoff's fraud, is warning about a giant fraud at this company that he calls bigger than Enron. The company is firing back. Morgan Brennan joins us now with more. Morgan?
Yeah, this is definitely a developing situation, Kelly. Quote, a bigger fraud than Enron and WorldCom combined. That is what Harry Markopolos had to say about this earlier today, and in this report for General Electric's accounting, scathing 169-page report that was out. As you mentioned, the shares are plunging on the allegations, which assert that GE's accounting fraud, those are the words he's using, amounts to $38 billion or 40% of the conglomerate's market value. He joined us on CNBC earlier today. Take a listen.
GE is losing $5.27 for each dollar of premium income they are taking in. Those losses are unsustainable, and they're growing at an exponential rate. For 2018, they grew at 60% rate. It's growing exponentially, and it's going to make this company probably file for bankruptcy.
So Markopolos arguing that GE will need another $29 billion in long-term care insurance reserves, including $18.5 billion requiring cash immediately. Also alleging accounting fraud tied to Baker Hughes. He discussed the GCAS business, the aircraft leasing business, on the network with us earlier today as well. GE responding to this report in detail this morning, but CEO Larry Culp making a very pointed statement just a few moments ago as well, calling the report, quote, market manipulation, saying it contains false statements of fact and that these claims could have been corrected if he had, meaning Markopolos, had checked them with GE before publishing the report, also arguing that it isn't about accurate financial analysis, given the fact that he didn't reach out to the company, but solely in generating a downward volatility in GE stock so that he, meaning Markopolos, and his undisclosed hedge fund partner can personally profit. Now, Markopolos is working with an undisclosed U.S.-based hedge fund that is shorting GE right now, is not giving us any of those details or that name. So that's certainly, that tie, seen as something of a perceived conflict of interest that is raising some eyebrows on Wall Street. Nonetheless, I mean, when you look at the long-term care business and you look at GE's history of accounting and its financials, it is not necessarily surprising to the analysts and the investors that are focused on this company to see more skepticism and the possibility of more skeletons or more issues being raised where the company's numbers are concerned. We'll see. We're going to keep digging into this. Back over to you.
The allegations of outright fraud are one thing. It was always known that General Electric went right up in many ways to the edge in terms of, they were aggressive, let me put it that way, in terms of their accounting. But the individuals who ran GE, whether it was Mr. Flannery and his team, Mr. Culp and his team, and even Mr. Immelt and his team, They had to know that by signing financial statements, they were pledging under penalty of going to jail that those statements were accurate and correct.
Yeah. And I think when you look at what's going on with GE right now, I mean, you do have regulators who have been investigating the company from several different agencies who have been looking at their accounting practices, at these reserve charges in long-term care insurance, for example, the way they've looked at their, industrial services revenue business and some of those long-term contracts, the way those things were accounted. So certainly there has been investigation into this company. It continues to be ongoing. I think one of the most surprising things today with Marco Polo's report and what he had to say on CNBC is the fact that he alleges that the current executive team, Culp and his team, who have been in place since last October, are basically just as guilty of quote unquote cooking the books as those previous executive teams before him. Very strong statement to make right there, but we're going to see how all of this plays out and how GE counters. Certainly, this is a company that has historically not always given the most detail about its finances and its financial accounting practices and in its earnings. They've tried to sort of lift the veil and get a little more transparent. But as this report alleges, there's still more to go here. So we'll see. Right now, the stock is really plunging, and we'll see how all of this plays out.
On that note, I just want to share a comment from Stanley Druckenmiller about General Electric. Druckenmiller was short the company on and off for a lot of the recent past and was not a big fan of previous management. But he said, I believe in Culp. Remember, Culp bought the stock earlier this week. Druckenmiller says, I have bought stock today. That's a big voice of support for a stock that is very hard hit today, including by these allegations. General Electric shares are still down about 12%. They are under $8 at the moment.
All righty, coming up, the bond market has been flashing a major recession warning, if not an infallible one. But what are economists saying? A rapid update on the economy is next. And retail sales were better than expected. Walmart reports strong results. Will the consumer hold steady? And retail's problems are retail problems more about the decline of the mall? Power Lunch will explore that and more when we return after this.
Family Taco Night is a heartburn night you can plan for. This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
As he turned the corner, it hit him. A smell so sweet, orchestral masterpieces could be composed about it. But what could it be? He had to find out. So with his nose leading the way, he wandered towards the paradise. He turned a corner and stopped. What lay before him was the most beautiful sight he could ever have imagined. A new bakery. And to think, he'd never have come across it had he taken the car. Walk, cycle, discover. To the Mayor of London and TfL, every journey matters.
If your old faithful fridge freezer is broken or on the blink again, relax. At AO, we have a huge range jam-packed with the latest technology to keep your weekly favourites fresher than ever. Plus, there's great deals on top brands like Hotpoint and Samsung, with finance options available. AO.com, the online electrical store. AO, let's go! Credit is subject to status. Must be over 18. AO Retail Limited is a broker and not a lender. Credit is provided by Secure Trust Bank PLC, trading as V12 Retail Finance.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Hey, baseball fans. Can't watch the game? Can't be there? You can hear the home and away call for every team and every game with TuneIn.
Again, the 3-2. Swinging a line drive up the middle, base hit. 1 run scores. 2 runs will score.
The app that brings together all the live sports, music, news, and podcasts you love in one place. Listen to every MLB game live as it happens or on demand with TuneIn Premium. Anytime, anywhere, all season long. The NFL is back on TuneIn.
Throws the ball backside of the end zone, deflected and caught. Touchdown.
With the NFL on TuneIn Premium, hear the home call of every game live all season long. The show begins throughout the month of August with live coverage of every preseason matchup on the schedule. Then, as training camps come to a close, be sure to mark your calendars for NFL Kickoff Weekend, featuring the Green Bay Packers at the Chicago Bears on September 5th. At home or on the go, hear every game of your NFL team on TuneIn Premium. Upgrade today.
In the market's volatility this week, Steve Leisman joins us now with a rapid update. When do you not have a rapid update? It seems like most days you have a rapid update.
Sometimes I'm a little slower than others, but today I am right on my game, Tyler.
On it, baby.
And I want to tell you that economists are raising their growth forecast because why? The strong July retail sales this morning. Consumer, anything but dead. Let's take a look now. We're now tracking 2.1 on Q3. That's up 0.2, so we're below 2. Now we're above it. A lot of data yet to come, but second quarter tracking 1.9. So we're down to where the economists think we ought to be, which is roughly trend growth for the economy. At least that's where we are in the early days. But some people think we're a little bit hotter. Emirates Pierpont, Stephen Stanley's at 2.6. The Atlanta Fed right there around the median at 2.2. Goldman Sachs, Action Economics, Bank of America, 2.1. Moody's 1.8 and Deutsche Bank 1.6. That big spread, the 1.626, not unusual at this time. Really only 1 month's worth of data in for the quarter. So what we do, we track. What is tracking? Well, we put them in. Every time a piece of data comes in, it goes into the model, and we're the only ones that do the median of all the models out there. Why? Because there isn't any perfect model, but the median does a better job. 2 is where we're tracking 2.1 right now, and we'll be following it closely. It's not 1, it's not 0, it's not negative, Kelly.
It's pretty good.
It's not what the bond market seems to be screaming.
No, it's not. It's not amazing, but it's, I mean, if you had said in the fourth quarter, hey, you know, the market, remember when we sold off the Christmas Eve lows, the initial concerns about recession, and that we'd have a 3% quarter, what was it, 2.1 in the second quarter, and maybe now 2% in the third? Yeah, it's bizarre how much of a disconnect there is right now.
Right now, yeah.
Anyway, Steve, thanks.
Pleasure.
Talk about the retail sales report, which did come in, yes, better than expected. It was in part thanks to Amazon's Prime Day, but the strength was pretty broad-based. And Walmart separately saw a boost to its own sales thanks to its rivals event. Walmart is now up about 20% this year, having a nice day after its earnings this morning. Not everyone is benefiting from retail's prime time, so to speak. Luxury name Tapestry, the owner of Coach and Kate Spade, down 20% today, 24% now on weak guidance. And look at Macy's, lower again today by 4.5%. With us now to discuss this are Bob Durbel, senior analyst at Guggenheim Securities, and Patrick McKeever is president and founder of the Daily on Retail. Bob, we'll start with you. What's the read-through from Walmart for the rest of retail?
Well, I mean, I think Walmart just had a tremendous amount of momentum, you know, from the business, and they continue to execute well. You know, and I think the tougher the environment, the better position that Walmart is from its consumer perspective.
Is this a tough environment? Because the retail sales report made it sound pretty strong.
Well, I think Walmart's a big part of that retail sales environment, and I think that, you know, they're taking share in many categories, including grocery. You know, the traffic's good, their e-commerce is good. You know, I think Walmart's got its act together, and I think a lot of people, you know, are being challenged by what Walmart has and the successes and the strategies that they're implementing.
Patrick, what happens to the mainline department stores?
Hi, Kelly. Well, I think, yeah, they continue to struggle. I think, I mean, the other thing we're seeing, I mean, you asked if the consumer was healthy right now, and yes, the consumer is very healthy right now. You see that in Walmart's numbers, which the comps accelerated as the second quarter progressed. And then you see all these retail upstarts like the Real and Revolve, even a newly public grocery store called Grocery Outlet reported, I think it was yesterday, and their numbers were really good. So there's growth out there, but it's not in the department store space. That space continues to be very, very difficult.
Patrick, what would happen, what could cause the consumer to become a little more timid?
I think what's going on right now with the stock market, the volatility in the market, the sudden tweets from the president, about China and the way the market has been reacting. That gets picked up by Main Street as well as Wall Street. And we're heading into the final stretch here back to school. We're only 3 months away from the official start of holiday shopping. And that could hurt. And of course, there's also growing talk out there about a recession. So consumers pick up on that as well.
Right.
Bob, when it comes to Macy's, which I believe you cover, what do they need to do now? I mean, this is getting existential. They need to come up with something major, don't they?
Well, I think they have a lot of initiatives underway. The traffic issue in the malls remains very challenging. They're trying a lot of different things, but they continue to struggle.
Right. So if you're them, I noticed that they rolled out the Bloomingdale's sort of subscription as a service box. They do have that brand, maybe a little bit better position in the market to pull on. But are we talking consolidation? Are we talking about monetizing the real estate? I mean, at some point when they're down, 60+% now from their recent highs and trading at, $15 or $16 a share, what do they need to do so they're not the next JCPenney, which is under threat of being delisted?
Well, I mean, I think it's all about driving the top line, driving traffic into the stores. The real estate that they have, I think underlying asset value exists at Macy's. But you talked about the subscription model. They have a partnership with ThredUp in terms of, resale of clothing, the various initiatives of the off-price backstage initiative. So they have a lot of things that they're doing. It's been a really tough environment for that traffic scenario, the mall-based retailers and department stores generally, as Patrick said.
Who would you stick with, Patrick? You mentioned the grocery outlet and some of the other newer players on the scene. These recent IPOs, I think people kind of want a more proven business model. Do we need to wait for that, give it a couple of years for companies including The RealReal, or is this to you the future of retail now?
Well, I mean, certainly I would stick with quality like Walmart and Target. Names. I'm no longer a sell-side analyst, so these are not stock recommendations. I'm doing something different now, but certainly those names. And yeah, there's these names that get beat up, the high-flying retail growth names that get beat up on a real big down market day. Those tend to bounce back pretty quickly. So anyway, some names like you just mentioned, some of the faster growing, the ones that are sort of reinventing retail. There's just so much going on right now in terms of artificial intelligence, delivery, et cetera, et cetera, et cetera. So yeah, I mean, there's growth out there, but it's just not in that mid area of retail, which is primarily the department store space.
All right, Bob Durbel and the liberated Patrick McKeever. Thank you both very much. Appreciate it.
All right, a new record low on the 30-year yield today. It came below 2%. So is the bond market overreacting to whatever weakness there is in the economy, or is it really suggesting that a recession is around the corner? And the Cisco Inferno, that stock down more than 8% after reporting earnings and saying it's getting burned by the trade war with China. The trade on Cisco, the Cisco Inferno, coming up.
Your daily dashboard from Fidelity. This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
It had been 22 years since Dan and Tom last met, since they shared a desk in maths and played football together at lunchtime. 22 years with nothing more than a few Christmas cards and an online friend request to show for it. A 21st century eulogy for the loss of a once great friendship. Until a chance meeting outside the corner shop. On a morning they both decided to ditch the car and walk instead. Walk, cycle, discover. To the Mayor of London and TfL, every journey matters.
If your old faithful fridge freezer is broken or on the blink again, relax. At AO, we have a huge range jam-packed with the latest technology to keep your weekly favourites fresher than ever. Plus, there's great deals on top brands like Hotpoint and Samsung, with finance options available. AO.com, the online electrical store. AO, let's go! Credit is subject to status, must be over 18. AO Retail Limited is a broker and not a lender. Credit is provided by Secure Trust Bank PLC, trading as V12 Retail Finance.
Quick, put these tights on and grease yourself up. Tights, Grease? Why?
It's time for your match.
What are you on about? Who's he?
The heavyweight champion of the world, Jackhammer Johnson. You asked me to book you a fight.
A flight. I wanted you to get me a flight.
Oh. Good luck. Should have gone to Specsavers for £400 off selected hearing aids. Offer ends 30th of September. Ask in store for details.
Some days, life can get in the way of catching up on the news that moves your world. TuneIn is here to help. With live 24/7 coverage from top outlets like CNN, MSNBC, and Fox News Talk, you can always find a chance to listen into your station of choice for up-to-the-minute reports and analysis on the biggest stories of the day.
Daily Beast. First of all, to the reporter, a lot of buzz. This is coming sometime.
When the moment calls for the sources you trust, get the live news that matters most with TuneIn.
Welcome back to Power Lunch. Cisco tumbling today after reporting a sharp decline in its China sales. Shares now tracking for their worst month since 2012. Is relief ahead or not? Let's bring in your Trading Nation team of Matt Maley of Miller Tabak and Mark Tepper of Strategic Wealth Partners. Matt, the charts would indicate that historically when this stock moves the way it does, it moves lower still, right?
Yeah, it does. I mean, it's amazing. Every time they report, the stock goes bonkers. I mean, this is the 13th quarter in a row where it's seen a big gap, sometimes up, sometimes down. This time it's down. I think it could go a little bit lower. As you mentioned, it tends to stay down, at least for a little while when it gaps lower off earnings. But it also broke a key support level. It's 52 level, which was the low from May and June. So that lower low tells me it could go a little bit lower. However, I'm looking at the 44.5 level as a great spot to buy it. That's a Fibonacci 38.2% retracement of the sell-off from, the rally from 2016, and where the trend line from the summer of 2017 comes in. So if the broad market sees another flush move, another washout, I think 44.5 would be a great spot to buy it.
44.5, a great spot to buy. And as you say, that is not that much lower than where we are right now. It's at 46 and change. Mark, you think the guidance was the main problem here. And you like it on a valuation basis.
Yeah, I mean, at the end of the day, it's a great large cap company to own. It's got a strong balance sheet, and that's really important when you're late cycle. Earnings weren't bad. They were pretty much in line. It was right down the middle of the fairway. But guidance was weak. I mean, their revenue growth was much, much lower than expected. And it's really all because of the macro issues. Global growth slowing, trade, all that stuff. So there's definitely some headwinds here. But here's a stock that's cheaper than the S&P 500 with a higher yield, and they're in a position where margins are likely to expand because they're going to continue to generate more and more sales from software and services. So I still think it's a great long-term buy.
All right, gentlemen, thank you very much. We appreciate it, Matt, Mark. And for more Trading Nation, head to our website or follow us on Twitter at Trading Nation.
And ahead on Power Lunch, the Wall Street Journal editorial board releasing a harsh op-ed on the economic impact of Trump administration's trade policies, what they are dubbing the Navarro recession. Plus, chip stocks are getting whipped around thanks to the trade tensions. A top analyst says there's more pain ahead. We'll have that for you. And speaking of trade, one U.S. company was set to become the first ever American rice exporter to China. Now that deal could be on the back burner. All this when Power Lunch returns.
And now, the latest from TradingNation.CNBC.com and a word from our sponsor.
Many traders like to watch technical patterns, and one of the most popular ones is called the Golden Cross. The Golden Cross is where the 50-day moving average moves up through the 200-day moving average. And while this pattern is not intended to get you in at the very bottom, it can often be an effective entry point for a stock or ETF that's in an uptrend. I'm Randy Frederick, and Schwab is the better place for traders.
Okay.
Silence the squawk. Find brand new cars ready to drive away today with Auto Trader.
This is a plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
The sun gently fell below the horizon. Rays of pure gold filled the sky, illuminating the towering structures of the London skyline. What else could Jane do but gaze in awe? She was but a silhouette upon a hill, wrapped up in a spectacle so perfect. No words, oil paintings, or smartphone filters could do it justice. She savoured it. Before hopping back on her bike and riding off, she had to finish her commute home. Walk, cycle, discover.
All right, welcome back. We're continuing to follow breaking news out of
Hello, everyone. I'm Suhanna Marchand. Right, we begin this hour with breaking news from
And TuneIn keeps you informed in real time. From national politics to global events, get live 24/7 coverage from top outlets like CNN, MSNBC, and Fox News Talk. And when breaking news hits, TuneIn keeps you updated with up-to-the-minute reports and analysis on the biggest stories shaping your world. Whenever, wherever. Get the live news that matters most with TuneIn.
Live from the TuneIn Studios, I'm Fonseca with your daily sports update. Today we've got a few football games. Yes, the NFL preseason. Eagles of the Jaguars, 4 p.m. Pacific. The Jets of the Falcons, 4:30 p.m. And the Packers of the Ravens, 4:30. Also the Raiders of the Cardinals at 5 p.m. Pacific. This is all happening today. If you want to catch NFL on TuneIn, search NFL and favorite your favorite team and make sure to never miss a moment of the action. It's your TuneIn Sports Update.
Welcome back, everyone. I'm Sue Herrera. Here's your CNBC News update at this hour. Democratic presidential contender Pete Buttigieg calling out Congressman Steve King for King's comments on rape and incest. In Iowa on Wednesday, King questioned whether humanity would exist if not for rape and incest.
Well, it's extremely disturbing, and I would think anybody who had said something that extreme would resign. But then again, I doubt that he'll actually do it. So we're just going to have to beat him the old-fashioned way. Thankfully, there's a terrific candidate in J.D. Scholten, and I think voters in that district are looking for a change.
Tiffany is hoping to reach a new customer base with a new jewelry line for men. This fall, the luxury retailer will launch its first comprehensive men's collection, including necklaces and bracelets. Prices will range from $200 to $1,500. And a pair of handmade Nike track shoes from the 1972 Olympic trials has sold for $50,000. Dave Russell says that they were just sitting in the rafters of his garage for a long time. Only 10 pairs were made, and they were sold to a hotel chain that is building a Nike-themed property. You're up to date. That's the news update this hour. Ty, I'll send it back to you.
I think those were the old waffle trainers with the waffle pattern on the soles. Back to the days of 72, Bill Bowerman, Steve Prefontaine.
They were called moon shoes.
Oh, is that right? No kidding. Moon shoes.
Moon shoes because of the craters. The waffles created craters.
Oh, how cool. All right, Sue, thanks.
You got it.
You know your shoes.
I do.
All right, let's check on the markets. The Dow fighting to climb back into positive territory. It got there. It is there. Look at that. 23 points higher right now. That's 0.09%. It did drop about 100 points at the top of the hour. That was as the 10-year yield broke below 1.5%. It is back now above that level, as you see there, at 1.525, Kelly.
Just barely. Now, in a tweet earlier this afternoon, President Trump said the U.S., quote, will soon be winning big on trade, and everyone knows that, including China. But the Wall Street Journal's editorial board begs to differ. They've slammed the Trump administration's trade policies, dubbing the potential downturn, quote, the Navarro recession. How should investors navigate the fallout? Let's bring in Larry Glazer, Mayflower Advisors managing partner, and Steve Masuka as managing director of equities at Wedbush. Steve, how likely is recession to you? How worried are you about it? And do you blame trade policy?
Well, I don't think a recession is particularly likely. Trade policy could induce one at some point, but I certainly don't think anything we've seen so far will create one. And also, we've got incredibly low interest rates, which are continuing to go lower, and that's good for the economy. We just went through a quarterly earnings season that went very well, with most companies reporting better than expected earnings. Revenue growth and earnings growth were both good, better than people thought there was going to be.
Okay.
So I think the economy's fine. I don't see an issue.
Larry, what about you? And it is interesting that we're all looking to these falling and negative bond yields as a cautionary sign. If we were assured the economy was okay, I guess we could take that as a positive.
That's right. Look, the turmoil we're seeing in the global financial markets are clearly sending a signal that a recession is knocking on the door. It's just not necessarily knocking on our door right now yet. And I think we talked to a lot of small business owners. They are taking a more defensive, measured approach. If you are in the shoe business in the Boston area, 70% of your imports are coming from China. That's an existential threat. If you're in the lobster business and you're selling lobsters to China and business is down 70%, that's an existential threat. But you see with the consumer data, in a consumer-driven economy, the consumer did not get the memo on the recession. Consumers alive and well. Walmart, same-store sales, earnings
Larry,
across the board. Lots of good things, Kelly.
It's interesting you say that because, you know, the journal's talking about trade policy, and the big concern, especially from the latest round of tariffs, is that they would more directly hit the consumer. Now, we've delayed about half to two-thirds of those, but still over $100 billion worth is going into effect September 1. Why hasn't there been a bigger impact on the U.S. consumer? Is it because the absolute amount is just not that large?
I think that's right, Kelly. Also, look, the biggest challenge right now for the economy as a whole is the tightness in the labor market. So the consumer feels very assured about their security in that labor market. They know they can get a job if they need one. Kelly, look, it's a global issue. And I think when we look at Europe, we realize how much better off we are than Europe. Europe's 6 to 12 months ahead of us. They've got negative interest rates. They're looking at potential for an infrastructure bill. I think in an election season, it becomes irresistible for politicians not to consider more inflationary measures, more infrastructure spending. It's the only card trick that hasn't been played by our politicians. And in a populist world, that's going to drive the economy. That gives individual investors an opportunity. Playing defense does not mean playing dead. It means looking for opportunities in this volatility. And there's lots of opportunities. Infrastructure stocks have been given up for dead. In Europe, dividend yields are much higher. That's your income replacement strategy for investors that can't get yield here. There's lots of opportunity. A weaker dollar means foreign assets go up in value on U.S. investors' books. So I think we have to look outside the box and start thinking differently in these robo-infested waters.
So, Steve, let me turn to you. You know, a growing economy is built largely on confidence, consumer confidence and business confidence, and both can be very fragile. When the stock market loses a lot of money the way it did yesterday, that gets investors' attention. All the talk of possible recession, that gets consumers' attention. And all of the whipsawing on trade makes it very much more difficult for businesses to plan. Wouldn't you agree, Steve?
Well, let me have a different take on it, Tyler, and that is that I think investors, for certain, should not get so wrapped up in the day-to-day activity of the market. I think the markets can be very, very volatile. I think you have to look at the overall economic facts. Interest rates are very low. The economy's doing well. There are lots of stocks out there with significant dividend yields that investors could buy. You could easily construct a portfolio yielding more than 5% of a whole host of equities. Think of ExxonMobil, Ford Motor, AT&T, all yielding more than 5% right now. So I don't think the market's that expensive, and I think investors should just, play it for the long term.
That really wasn't my question. That really wasn't my question. Right. My question really goes to it really goes not to what investors should do, but it goes to how consumers and business leaders may react to unstable conditions that they see.
Well, I think even businesses tend to have a long-term view right now. And yeah, we had a little bit of volatility this week. Our interest rates are actually catching up with Europe and with Japan, and I think that's more of what's going on than predicting a recession. Our interest rates have been the outlier. So I don't think this volatility, to answer your question, will really affect the ultimate decision-making by businesses or consumers that greatly. Just this last week, no.
All right. Thank you, guys. Appreciate it. Larry Glazer, Steve Masuka, thanks for joining us.
And it has been an awful August for the chip stocks. Semis getting slammed on every negative trade headline. The SMH down 6% in August, an even bigger decline for NVIDIA. That one down 11%, and that company reports results after the bell. We will check on the chips. The chips are down on Power Lunch.
The Bond Report. is...
This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
Man, it's been some summer. Feels like the carnival could go on forever. Capture the joy on your new Huawei P30 series, and it really will go on and on from just $19.99 a month with no upfront cost from Carphone Warehouse. Stretch out the long summer days with the hot phone of the moment. The Huawei P30 series, now with up to £100 cashback. Pull a switcheroo at Carphone Warehouse. Offer ends 4th of September. T's and C's and contract apply. Visit website for details.
As he turned the corner, it hit him. A smell so sweet, orchestral masterpieces could be composed about it. But what could it be? He had to find out. So with his nose leading the way, he wandered towards the paradise. He turned a corner and stopped. What lay before him was the most beautiful sight he could ever have imagined. A new bakery. And to think, he'd never have come across it had he taken the car. Walk, cycle, discover. To the Mayor of London and TfL, every journey matters.
If your old faithful fridge freezer is broken or on the blink again, relax. At AO, we have a huge range jam-packed with the latest technology to keep your weekly favourites fresher than ever. Plus, there's great deals on top brands like Haier, Bosch and Beko with finance options available. AO.com, the online electrical store. AO, let's go! Credit is subject to status. Must be over 18. AO Retail Limited is a broker and not a lender. Credit is provided by Secure Trust Bank PLC, trading as V12 Retail Finance.
Live from the TuneIn Studios, I'm Fonseca with your daily sports update. Today we got the Cubs, the Philadelphia Phillies. The first pitch is at 4:05 p.m. Pacific.
Ground ball fair, past third. It'll go down the line. It's all the way to the corner. Around for second is Knapp. Knapp headed for third. They're waving him to the plate. The relay home from Baez is going to be late.
To find out what the latest is happening around sports, from podcasts to news to even hearing the games and replays, search sports on TuneIn today. It's your TuneIn Sports Update.
August has been a month to forget for the semiconductors. It is one of the worst performing groups in the market. That's why we have such dark lighting on that screen. It's all dark. It's darkness descending over the semiconductors. One of the victims of the volatility has been NVIDIA, as shares are now down 11% since the beginning of the month when President Trump threatened additional tariffs on China as the company gears up for its earnings report after the bell. Let's talk it through. One top analyst doesn't back down on this. He's an NVIDIA bull. Mitch Steves, equity research analyst at RBC Capital Markets, holds an outperform rating on NVIDIA with a price target of $190. Mitch Steves, thank you very much. I love those travel guides you write, and I'm just kidding. Let's talk about NVIDIA. What are you looking for in the numbers this afternoon?
Yeah, so specifically, we're looking for data center to miss a little bit, probably about 20 million off, so we're somewhere around 650. We think gaming will be in line, 1.3 billion or so. We think they're going to benefit from probably 25 to 30 million probably of cryptocurrency-related Ethereum mining revenue. And then finally, for the guidance, that's where we're ultra-focused. We think the expectations are already low for the July quarter, but for the guidance, anything close to in line, I think will be enough, as long as the gross margins are close to 60% for the guide.
So in line is A plus in your view, basically.
I think inline is good enough at this point, considering the results we saw from Intel, the results we saw from the other IT providers, even Cisco, for example. So expectations are definitely low. I would say this is essentially a consensus short into the print. So if that's the case, it usually means expectations are well below where the street is right now.
Why has the stock suffered so much over the past year?
So over the past year, it's primarily been to cryptocurrencies. They talked to doing about 600 million in a total crypto revenue. We had a number of 1.2 billion. And so that number ended up causing a couple of negative pre-announcements back in January and I think the October frame as well was a negative guide down. And so now that you're going off the easier comparisons now, so that's completely out of the model, it should all be data center, core gaming business, Switch revenue should come back as well. So I think all those things are going to start to work in its favor now that it's coming off the lows from the cryptocurrency pull down.
And what happens, Mitch, is the U.S.-China talks just kind of hang there in the balance and these stocks are left at the whims of them?
Yeah, at the end of the day, you can't really do anything about what Trump's going to do or say or tweet or, try to predict that. I think it's pretty much impossible. So all you can really do is wait for that to eventually get resolved. And at the end of the day, you want to be exposed to the best tech. So NVIDIA, AMD, for example, are two of the highest quality tech names in semiconductors. So if you look over 5 years, you got to take the long-term view. As long as you're bullish on AI, deep learning, and the use of GPUs in the future, you have to be long NVIDIA. So I'm not going to try to predict what Trump's going to do with the U.S. and China. But at the end of the day as well, for that one, if they actually get a resolution there, I wouldn't be surprised to see the stock go up 10% or so.
On NVIDIA, how important is the gaming business to them?
I would say that the majority of the value is in data center. I'd say that 60% of the focus is going to be on data center, and probably 30% on gaming, and the remaining business the remaining business will be about 10%, primarily auto business. But auto and self-driving vehicles doesn't start to the end of 2020 or so.
Right. All right, Mitch. Thanks very much. We appreciate your time today. Thanks.
Perfect. Thank you.
You bet.
Despite China's edict against U.S. agricultural products, there's one company ready to be the first U.S. company to send rice to China. Contessa Brewer is at Sun Valley Rice in Arbuckle, California, as they wait to hear if the order will be canceled. Contessa?
It's a big if, Kelly. This company, Sun Valley Rice, grows, mills, and distributes rice. They export it to places like Europe, the Middle East, Japan, and Korea, but they've never sent it to China. No U.S. company has, but they want to badly. For one reason, U.S. rice is considered a premium product here. It's short grain, and it's really considered a luxury, an affordable luxury for that middle class in China. And of course, China is the biggest rice market in the world, consuming 36 times more than the United States. Sun Valley founder and CEO Ken LeGrand has spent more than $1 million in 15 years trying to open up the Chinese market. In June, amid this trade war, LeGrand landed his first ever Chinese contract. Despite the retaliatory ban on U.S. agriculture, he's optimistic the Chinese government will permit him to move forward.
The indications that they're giving our customer, which is really who they work with, are all, green lights. We're a licensed supplier. We've been licensed by the Chinese government as a supplier. So, nothing's off track there.
The harvest ripens at the end of September, and if this deal remains a go, the first shipment will be tiny, only about 2% of what Sun Valley ships in, say, a week. But the potential here, the U.S. rice industry is a $34 billion industry, and the profit margins are slim. Ken LeGrand tells me 3 to 5%. He's hoping in China he could double that profit margin, but of course that likely depends on a trade truce. Kelly, Tyler.
All right, thank you very much, Contessa. We appreciate it. In Arbuckle, California. All right, just over an hour left in the trading day. Could get busy, folks. Much more on the markets coming up after this.
I found a way to relieve my constipation that's both...
This summer at Chessington World of Adventures Resort, answer the call of the wild. With over 1,000 of the world's most amazing animals and over 40 of the wildest rides and attractions. Meet the Gruffalo and all your favourite characters at the Gruffalo Summer Party and so much more. Book early and save up to 40% at Chessington.com. It's Britain's wildest adventure for all the family.
Silence the squawk. Find brand new cars ready to drive away today with Auto Trader.
This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
The sun gently fell below the horizon. Rays of pure gold filled the sky, illuminating the towering structures of the London skyline. What else could Jane do but gaze in awe? She was but a silhouette upon a hill, wrapped up in a spectacle so perfect, No words, oil paintings, or smartphone filters could do it justice. She savoured it. Before hopping back on her bike and riding off, she had to finish her commute home. Walk, cycle, discover. To the Mayor of London and TfL, every journey matters.
If your old faithful fridge freezer is broken or on the blink again, relax. At AO, we have a huge range jam-packed with the latest technology to keep your weekly favourites fresher than ever. Plus, there's great deals on top brands like Hotpoint and Samsung, with finance options available. AO.com, the online electrical store. AO, let's go! Credit is subject to status, must be over 18. AO Retail Limited is a broker and not a lender. Credit is provided by Secure Trust Bank PLC, trading as V12 Retail Finance.
Welcome back as we watch these markets here. The main news of the afternoon has been what's happened in bond yields. The 10-year interest rate, Tyler, going below 1.5% for the first time since 2016. The all-time low from there, 1.318, and the 30-year.
And look at the 30-year below 2%. I heard Mohamed El-Arian earlier today say something that was, in some quarters, inflammatory. Now is the time to load up and do a big infrastructure project at 1.98% and pay for it that way.
You have people calling on the U.S. to issue 50 and 100-year debt, saying you should take advantage of these low levels, while at the same time screaming that there's no fiscal discipline, so that agitation will get worse.
This remains, to me, a very headline-vulnerable market. This morning, the market moves up on the news out of China that they must have been singing that Maren Morris Zed song, "Why don't we just meet me in the middle?" They said, well, if you meet us in the middle, maybe we can get a deal done. That sent markets higher. On Monday, it was other stuff. On Tuesday, it was yet other stuff that sent the market gyrating.
And watch Europe and the ECB, what they do in September. Thanks for watching Power Lunch, everyone.
Closing bell right now.
Welcome to the Closing Bell, everyone. I'm Wilfred Frost. We're into the final hour of trade. It's already been a volatile day for markets. Some big individual movers as well, including GE tanking some 11% after the company was accused of fraud. Coming up exclusively, we'll hear from a board member, the chair of the audit committee. No less. 59 minutes left to go. So much to discuss.
So much to discuss, Wilfred. I'm Morgan Brennan in for Sarah Eisen. Let's take a look at what is driving the action today. Conflicting tariff news as China and the U.S. attempt to set the terms for trade deal progress. Retail sales coming in stronger than expected this morning. Meanwhile, opposite signals from the bond market, with yields dropping, sparking concerns about the economy. We have got a full team coverage of all of these key stories that are driving the market action, from New York to Washington to the CME in Chicago. Let's start with Bob Pisani, though, who has been tracking the volatility from here at the New York Stock Exchange. Bob.
Again, 10-year yield moving the stock market middle of the day. Take a look. We've been overlaying this pattern for about a week now as the 10-year yield moved below 1.5%. Some sell programs kicked in. That was just prior to 2 p.m. Eastern time. And the market's recovered as the 10-year again moved over 1.5%. That's the key mover of the markets the last 2 weeks. Two notably weak sectors today. First, transports. Problem all month. Many of these down double digits, but logistics and trucking companies like J.B. Hunt, Ryder, airlines like American, FedEx, all weaker. All of these are down double digits just in the month of August. The other retailers, I know Walmart's helping consumer sales, but the big retailers continuing to get slammed again today. Macy's, Gap, L Brands, Kohl's, all down 2 to 4%. And look at Gap, down 7%. Right now, energy also weak today. Guys, back to you.
Bob Pisani, thank you very much. Let's get to Kayla now for the latest on trade. Kayla.
Well, Wilfred, the U.S. and China continue to be at odds over a deal and when it would happen. In a series of missives, the Chinese government says it will retaliate in September if the U.S. puts on new tariffs, that Washington should not offer advice on Hong Kong, even though Trump has been tweeting that the U.S. must meet Beijing halfway to reach a deal. The president, meanwhile, says a deal will be on U.S. terms, that President Xi should simply meet Hong Kong protesters to settle their concerns, and that the U.S. will soon be winning big on trade, without saying when or how those two sides would get there. Morgan?
Kayla, thank you. Shares of Walmart are higher on strong earnings results today. That's helping power the Dow here. Let's get to Courtney Reagan for more. Hey, Court.
Hey, Morgan. So Walmart did beat the street with its second quarter earnings, revenues, and U.S. comparable sales. U.S. net online sales also up 37%. That contributed about half of the 2.8% U.S. comp sales gain. The 20th quarter in a row that U.S. comp sales saw growth. Walmart also upping its forecast for earnings, revenue, and comps for the year, and that accounts for tariffs coming in September and October. Analysts say the retailer is benefiting from a strong U.S. consumer, but they also have to give a lot of credit to the retailer's management for all the strategies they've employed to leverage stores and digital together. Morgan.
Courtney, thank you. While we have you, we also got July retail sales this morning. Tell us about those numbers.
Yeah, so even with other economic data points that are sending us some warning signals, this one is another indication that the U.S. consumer is strong. So retail sales grew 0.7% in July from June. This is a month-over-month number. Stripping out autos and gasoline, retail sales grew 0.9% from last month. So July actually marks the 5th straight monthly gain and the strongest 5-month growth rate for this since 2005 to 2006. Non-store retailers, so that's a lot of online players, the strongest group of 2.8%. Makes sense, a big boost from Amazon Prime Day that happened in July. Restaurant sales up more than 1% in July from June. Electronics up almost 1%. Department stores too. This is a tricky one. This is up 1.2% in the month, even after we saw Macy's report that disappointing quarter. But remember, the Commerce Department marks department store sales down 4.7% when you're looking year over year. And that's, of course, how we look at a lot of these earnings reports. Back over to you, Wolf.
Court, thank you very much for that.
Yeah.
Now, the 30-year yield dropping to a new record low today. Rick Santelli has more on the extraordinary moves we've seen in the bond market once again today from the CME in Chicago. Hey, Rick.
Yes, Wolf, as a matter of fact, even great retail sales trumped by headlines out of Europe earlier today, foreshadowing their September 12th meeting with a stimulative surprise. Intraday 30s, ignoring all the data points, dropped under 2% where it still sits. Bob is right. 2-day at 10s, we were down to 147, and we've bounced. But the bounce at 153, still down 5 on the session, and finally boomed, minus 71. There's a long time between now and the ECB meeting, but even Mexico running to the party, cut rates for the first time in 5 years. Wolf, back to you.
Rick, I've been listening to your commentary all day and agree. I think that low of the session close for the German 10-year Bund was related to the commentary from ECB member Rehn. But do you really believe that they would go ahead with a big stimulus in the final meeting before Christine Lagarde takes over the reins? Surely they'd wait for her to come in and set out her stall herself.
You know, these guys don't really care if they do or not. They have been sent messages before. They front run, and not in an illegal way, and this is a global phenomenon, and they are piling in. Greater fool theory. They pile in, the ECB does more stimulus, they get relieved by people behind them buying more. All I know is all these hints and previous pre-meeting hints have been on the correct side of history. I can't tell you the answer, but I can tell you many global traders certainly do believe that.
Rickster, as always, thank you very much. Now joining us for the full first hour of the show, Stephanie Link from Nuveen, a TIAA company. Excuse me, Stephanie, great to see you as always.
Thanks, great to be here.
So how do you sum up today's market moves?
2 stocks, Walmart versus Cisco. We've been saying all year long that the consumer has been strong and been the engine of growth in the economy versus global growth slowing down, particularly China. And this was completely the case with both of these stocks today, right? I mean, Walmart did a lot of good things that, internally to actually have good results, but the consumer traffic was great. Same store sales, 2-year basis, 7.3%, really good showing. Cisco, on the other hand, China was a big problem for them. That was one of the reasons why they actually had to lower guidance. So it's like the tale of two halves, right? You want to be involved in the consumer, and you probably want to just be careful on the cyclical side of things.
Let's add in David Zervos, Chief Market Strategist at Jefferies, to discussion. Great to see you, David. As always, does the macro data of late match Stephanie's micro summation of the kind of state of play at the moment as well? Strong US, weak international.
It definitely does. I think the strong U.S. data is actually pretty amazing. You had the Empire, the Philly Fed, a lot of other pieces of data, productivity data, all pretty good, and the bond market's just shrugging it off. So I think there really is this international push, the Bund breaking to over negative 70 or under negative 70, I should say. And I think there's another thing going on in the bond market. We've seen bond market volatility as measured in the MOVE index, which is like the VIX for bonds, touch levels that we haven't seen since 2016. And I think we're seeing a lot of stops. People had curve steepeners on. They're getting out of those. It's really, there's a lot of positioning in the bond market that may not be as informationally valuable as we're trying to read into it. So I think I want to watch how this bond market progresses over the next couple weeks to see if the bond market isn't just kind of having one of those cathartic sessions where we have to get a bunch of people out of bad trades, and then we can actually get the bond market to give us better signals for what's going to happen in stocks.
That is a key point that David is making right there. I mean, especially when we talk about the yield curve inversion and the fact that that historically has been seen as a recessionary signal. We were talking about it a lot yesterday. Again, the Dow down 800 points, probably spooked quite a number of people who maybe don't even regularly check their portfolios, but see a headline number like that. What do you think the bond market is telling us? And are we talking too much about the rising risk of recession right now to the point where we could actually talk ourselves into a recession?
Well, you could talk yourself into recession if you get business confidence and consumer confidence to start to deteriorate. So far, so good, though, on that front. Both remain elevated. Look, I mean, I think that the bond market, it's obviously very complex because we do have slowing growth here as well as abroad, right? I mean, that has been known, right? And so that's one of the reasons why the long end has actually been coming down, right? But I mean, at the same time, I mean, lower rates around the world, it's like central bankers are like fighting to get to the lowest rate. And so naturally, it's kind of like, where are they going to go? This is the best rate here. And so I think that's really what it is, much more fund flow driven versus fundamental driven, even though we are slowing, but we're not going into a recession.
David, should the Fed cut by 50 basis points purely and simply to re-steepen the curve?
I think, well, Wilf, I always answer those questions on, what the Fed should do by saying nobody really cares what I think the Fed should do. It's what they're going to do. That's what our clients like to hear from people like me. Their information from the bond market in the coming weeks as people come back. I'm not at all convinced that we have big recession risks on the horizon. I'm also not at all convinced that this curve is telling you that recession is even on a 12 to 18-month horizon forward. And I am quite concerned that we've just seen a lot of stop-outs get us here. So I think it's a decent time to be more sidelined, especially if you had, think about where we came from. In the beginning of July, stocks were up 20% for the year, and a typical bond portfolio with duration was up over 10% for the year. Those are great numbers in 6 months. You don't have to chase this 10-year note below 2% and equities above 3,000. You can afford to watch it a little bit, and I think that's what I've been telling our clients, and I'm sort of happy I did it, and I'm not seeing any reason to jump right back into either until I get a better feel for what this bond market is telling me.
David Zervos, as always, great to see you. Thanks for joining us.
Thanks, Will.
We've got just under 50 minutes, 48 minutes left to go before the close. Yesterday, of course, we sold off into the close and ended at the session lows, down 800 points. Today's been volatile, some green, some red, but we are close to the session highs at the moment, up 104 points. The session high on the Dow was up 133.
We're going to see if this lasts. Plus, GE plunging on a new report attacking the company's accounting. We spoke with the author of that report on CNBC this morning.
Those losses are unsustainable, and they're growing at an exponential rate. For 2018, they grew at 60% rate. It's growing exponentially, and it's going to make this company probably file for bankruptcy.
Well, GE is hitting back. CEO Larry Culp calling it market manipulation. The report, that is. GE board member and chair of the audit committee, Leslie Seidman, will join us live for an exclusive interview in just a few minutes.
And as we head to break, here's a check out of our data tracker. A number of positive economic reports came this morning. Retail sales strong, as we've already talked about. Also beating was productivity and unit labor costs, as well as the New York Fed's manufacturing index, the Philly Fed, and home builder sentiment. On the weaker side was initial jobless claims, which rose more than expected, and industrial production and business inventories also both missed. We're back in a couple minutes.
Relative value investing can be hard. Now it's easy with Directions.
You've picked a good spot for it. Shall we crack out the food?
You open the hamper, darling, and I'll just tell you a little about this yellowtail Pinot Grigio.
A little? That wine will be getting warm in the sun.
Experience how the fresh passion fruit and apple flavours with a zesty palate combine to create an intense yet youthful Aussie white.
Sorry, it's the ants. Yeah, the ants were heading towards the sandwiches.
Yeah.
It's a Pinot Grigio. It's fresh and zesty, and it tastes great. Enough said.
Yellowtail. Cut to the taste.
This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
With OneNet on Vodafone Business, you can make and receive landline calls from your mobile, meaning your office could be here. Or here. Or more likely, here.
Hello, Saunders Designs. How can I help?
Your office can be anywhere with our OneNet virtual landline. Available on our new unlimited data plans. The future is exciting. Ready? Vodafone Business.
Max download upload speeds apply to data. Coverage may vary. Unlimited and OneNet terms at vodafone.co.uk/terms.
It had been 22 years since Dan and Tom last met. Since they shared a desk in math, played football together at lunchtime. 22 years with nothing more than a few Christmas cards and an online friend request to show for it. A 21st century eulogy for the loss of a once great friendship. Until a chance meeting outside the corner shop. On a morning they both decided to ditch the car and walk instead. Walk, cycle, discover. To the Mayor of London and TfL, every journey matters.
If your old faithful fridge freezer is broken or on the blink again, relax. At AO, we have a huge range jam-packed with the latest technology to keep your weekly favourites fresher than ever. Plus, there's great deals on top brands like Haier, Bosch and Beko with finance options available. AO.com, the online electrical store. AO, let's go! Credit is subject to status, must be over 18. AO Retail Limited is a broker and not a lender. Credit is provided by Secure Trust Bank PLC, trading as V12 Retail Finance.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted. We study how to make work not suck.
And it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
The sector has pulled back for several weeks after rallying in June. Let's get to Katie Stockton, founder and managing partner at Fairled Strategies, for more. She joins us at the Telestrator. Katie.
Of course. So we're looking here at the S&P 500 healthcare sector ETF, and you can see the pullback right here into some potential support in that sort of $87, $88 area. I do think it will discover support there. What's interesting about healthcare, of course, is that it's really captured a phase of outperformance with the pullback in the S&P 500. So to me, that shows its defensive qualities, but it really does improve the relative strength outlook to some extent, which of course was very bearish for healthcare versus the broader market from about December all the way through April. So it does suggest that we'll get away from that kind of environment.
And was that bottom there in the relative performance right at the market top for the S&P 500?
That's right. So just really over the last couple of weeks that we've seen that relative relief rally.
And you've been diving into an individual name as well that stands out in terms of the technical.
Right. So I have McKesson. I'm not sure if I need to pull it up here or not. There we are. So intermediate term momentum is positive for McKesson still, and that's actually quite rare in the marketplace after this pullback that we've seen. So it stands out to me for that reason. We've seen in McKesson a nice breakout above this base resistance level, so that's promising a reversal of the downtrend line. You can see that here based on the shaded area on the chart, and that's also compelling to me. So as a turnaround play within the healthcare sector, I do like McKesson.
Steph, where do you stand on healthcare broadly and McKesson specifically?
I like healthcare a lot. I've been adding to United Healthcare. It's one of my biggest positions. And then most recently, a brand new position is Amgen. After the Enbrel announcement, I like their pipeline. The valuation is still very cheap. And biotech has kind of been wishy-washy this year, right? And McKesson, I just have more concerns on the political front and the headlines that we get. So that's why I'm not involved in that one. But plenty out there in healthcare to like.
Katie Stockton, thanks for joining us. We've got 42 minutes left of trade. Let's check in on the markets as we go to break. We are up 84 points on the Dow. A nice 150-point swing in the last hour or so. We did trade lower as yields once again slipped about an hour and a quarter ago, but a little bit of positive momentum as we approach The close up about 0.3% on the Dow. Coming up, a bearish call on one stock citing weakness in the global economy. The first place a recession might strike next.
And GE sinking today after fraud accusations. Independent board member Leslie Seidman will come on to live here exclusively to respond as the company hits back and denies those allegations. We've got more Closing Bell after this break.
This CNBC program is...
This summer at Chessington World of Adventures Resort, answer the call of the wild. With over 1,000 of the world's most amazing animals and over 40 of the wildest rides and attractions. Meet the Gruffalo and all your favourite characters at the Gruffalo Summer Party and so much more. Book early and save up to 40% at Chessington.com. It's Britain's wildest adventure for all the family.
Silence the squawk. Find brand new cars ready to drive away today with Auto Trader.
This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
It had been 22 years since Dan and Tom last met, since they shared a desk in maths and played football together at lunchtime. 22 years with nothing more than a few Christmas cards and an online friend request to show for it. A 21st century eulogy for the loss of a once great friendship. Until a chance meeting outside the corner shop. On a morning, they both decided to ditch the car and walk instead. Walk, cycle, discover. To the Mayor of London and TfL, every journey matters.
If your old faithful fridge freezer is broken or on the blink again, relax. At AO, we have a huge range jam-packed with the latest technology to keep your weekly favourites fresher than ever. Plus, there's great deals on top brands like Haier, Bosch and Beko with finance options available. AO.com, the online electrical store. AO, let's go! Credit is subject to status, must be over 18. AO Retail Limited is a broker and not a lender. Credit is provided by Secure Trust Bank PLC, trading as V12 Retail Finance.
Hey, CNBC listener, did you know that right now you could be listening to this station commercial-free? That's right. The same live business coverage plus all your favorite shows like Mad Money, Closing Bell, Squawk Box, and more with no ads. Instead of those commercial breaks you keep hearing, you'll hear recaps of today's top news stories.
CNBC commercial-free.
304,000, and even though a big revision took away the 3 handle and popped it down to 220.
All of the news, none of the ads. Try it free with TuneIn Premium today.
To the Closing Bell, time for Word on the Street. Stevens has initiated on Caterpillar as underweight with a $100 price target. The firm citing slow economic growth and negative risk reward for the company. Argus Research upgrading Pinterest to buy with a $40 price target. The firm says that Pinterest is well positioned as a host of content for the global ad industry. And JP Morgan upgrading Liberty Formula One to overweight with a $50 price target. The firm citing tailwinds, including inflation in sports media rights, a longer race calendar, and better monetization opportunities. Let's start with that one, Stephanie, the fun one. It's already up 30% year to date, but the upgrade gives it another 26% upside from here. I mean, sports rights very, very valuable in this moment, but Formula One's not that popular here in the US.
No, I know. It really isn't. But that's what makes it kind of an interesting story, right? It's kind of off the radar screen. Mm-hmm. In fact, I had to take a double take this morning when I saw the upgrade. But I think the cost story is also important because you mentioned sports rights, but it's on the cost front. They've been spending so much money over the last several years, and now it seems to be plateauing, and that's where you're going to get the operating leverage. And in addition, they're going to pay down their debt. Still very, the balance sheet's still not that great, but that's what their plan is to reduce that leverage too.
Yeah, changing ownership a couple of years ago, she you're saying it's settling down now after that on the cost side. Also, let's touch on CAT. So the Stevens Note $100 price target, initiating with an underweight. You still hold CAT?
I do. I mean, it's trading at 9 times earnings. It's down 9% on the year. The company actually in the most recent quarter, I mean, their guidance on revenue was at the low end, but they didn't lower numbers in the face of a global slowdown. Mm-hmm. So if they can do that in a global slowdown, if you get any kind of a pickup at some point, I think the stock is ready to go.
What sort of price gets you to top up your position?
I think like 110. I mean, I was buying this years ago when it yielded 5%, and it was like it's $70. So it's a little harder for me to buy up, but I still like the story a lot.
So sitting on some nice gains there, Steph. As always, congrats. So we've got just over 30 minutes, 37 minutes left to go of trade. The Dow at the moment up 79 points. We have got some red on the screen, as you can see, for the Nasdaq and the Russell. S&P and Dow up about 0.2, 0.3%. Still to come, we've got your last chance trade before the close. And GE shares plunging after that short report alleging fraud at the company this morning. GE swinging back. An independent board member and the chair of the audit committee will join us next, live, exclusive, to dispute the claims made this morning. You don't want to miss that. The stock has been all over the place today, remains sharply lower. Can it turn around off the back of that interview? You'll find out next here on The Closing Bell.
G'day.
Hi, it's Paul from Grantham.
Pablo?
When are skinny jeans too skinny?
Before you shrink wrap your valuables,
We want to ask you some questions. Okay.
has your voice gone up an octave in the last 5 minutes?
If you put your hands in your pockets, might they get trapped?
Do you feel like you're on a TV show called When Denim Attacks?
Well, I do feel a bit like that. You're wearing them now, aren't you, Pablo? Mm-hmm. Trust us. If you ever want little Pablos...
You might want to wear something roomier.
I get it, guys. I'm going to change.
Hooroo!
Foster's. Good call.
Drinkaware.co.uk for the facts.
More choice.
Silence the squawk. Find brand new cars ready to drive away today with Auto Trader.
This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
As he turned the corner, it hit him. A smell so sweet, orchestral masterpieces could be composed about it. But what could it be? He had to find out. So with his nose leading the way, he wandered towards the paradise. He turned a corner and stopped. What lay before him was the most beautiful sight he could ever have imagined. A new bakery. And to think, he'd never have come across it had he taken the car. Walk, cycle, discover. To the Mayor of London and TfL, every journey matters.
If your old faithful fridge freezer is broken or on the blink again, relax. At AO, we have a huge range jam-packed with the latest technology to keep your weekly favourites fresher than ever. Plus, there's great deals on top brands like Haier, Bosch and Beko with finance options available. AO.com, the online electrical store. AO, let's go! Credit is subject to status, must be over 18. AO Retail Limited is a broker and not a lender. Credit is provided by Secure Trust Bank PLC, trading as V12 Retail Finance.
Welcome back. We have 33 minutes left to go of trade. Here are the things driving the action. Conflicting tariff news as China and the US attempt to set the terms for trade deal progress. Retail sales coming in stronger than expected this morning. Meanwhile, opposite signals from the bond market, with yields dropping once again, sparking concerns about the economy. We're up 83 points on the Dow with 33 minutes left. But it's time for a CNBC News Update with Sue Herrera. Hi, Sue.
Hello, Wilf. Hello, everyone. Here's what's happening at this hour. Former Colorado Governor John Hickenlooper is ending his bid for the Democratic presidential nomination. He released a video on social media announcing his decision.
I'm also proud of the campaign. I want to thank each of you, the leaders across this country who supported this campaign, those of you who invested financially, and the thousands more of you who made investments of your time and energy and ideas. Thank you all so much.
Peyton Manning helping to open the new Children's Hospital emergency room that bears his name in Evansville, Indiana. The former NFL quarterback for the Indianapolis Colts and the Denver Broncos was front and center along with hospital staff and children to cut the ribbon. Hormel Foods says it will release a limited edition run of pumpkin spice Spam on September 23rd, but it's only going to be available online at walmart.com and spam.com. No word yet on what it might cost. I am not sure about that one. Morgan, I'll send it back to you.
Sue Herrera, thank you. Well, General Electric sinking after fraud investigator Harry Markopoulos issued a 169-page scathing report about the company, alleging it is covering up accounting fraud. He says he spent the past 7 months analyzing GE and claims to have uncovered $38 billion in fraud, which he says is bigger than Enron. Take a listen to what he had to say on Squawk on the Street this morning.
The numbers are missing. They report top-line revenues, bottom-line profits, and nothing in between, like expenses, research and development, selling, general administration costs, research and development. It's all missing, including cash flows. They don't provide working capital. It's the only company in that industry that doesn't provide working capital. In fact, GE's working capital is minus $20.3 billion. Their current ratio is 0.67. If you word search current ratio in their annual report, it doesn't appear. Name a company that does that. That's accounting 101. WorldCom and GE and Enron lasted about 4 months once their accounting frauds were exposed. We'll see how GE does.
So in a statement, GE CEO Larry Culp calling the report, quote, market manipulation, saying Mr. Markopoulos' report contains false statements of fact, and these claims could have been corrected if he had checked them with GE before publishing the report. Joining me now in a CNBC exclusive interview, Leslie Seidman, who is an independent director on GE's board and the GE Audit Committee chair. Leslie, thanks for joining us today to respond to this.
Thanks for having me here.
So as the audit chair, I mean, we just covered a little bit of Mr. Culp's response, but how do you respond to these allegations?
Morgan, when I saw the report this morning and had a chance to just flip through it, my initial reaction was that I thought it was full of misleading, inaccurate, and inflammatory statements. That report does not reflect the GE that I know. I've been on the board for about 18 months now, and I've been the chair of the audit committee since April. And my experience being a director at GE is that I'm working with a great team of people and a great set of director colleagues. And our number one objective is to ensure that the market views our financial reporting as full of integrity and that we're providing complete and accurate financial information. So I think that the basis on which the report was developed is questionable at best. I don't recognize some of the accounting practices that he describes as GAAP. And given my background at the Financial Accounting Standards Board, I think I'm in a unique position to know when I see somebody who understands accounting and somebody who doesn't.
Yeah, I mean, you're the former chairman of the Financial Accounting Standards Board, a role you had before you did come to GE. The allegation of fraud, I mean, certainly accounting and accounting practices and standards historically at GE have been raised. Regulators are continuing to look at that in some of the different businesses right now. But fraud specifically, why not fraud? Why is that the wrong label to be putting on this, according to that report?
Fraud is such a strong and inflammatory word, meaning, intent to willfully deceive. Again, that is not the GE that I know. We are in full compliance with accounting standards in the U.S. We prepare them with a rigorous process. I, as the chairman of the audit committee, have full access to the people and the books and records at GE, and I stand behind the financial reporting of this company. Our role as directors is to oversee the process, and since I've joined the board, and again, speaking for my colleagues, we take this really seriously, and there is no basis for an allegation of fraud here.
Long-term care insurance, I mean, it's just been historically, not only at GE, but across the industry, it has been a really tough business for companies to get their arms around in terms of assessing the risks, taking the reserves, accounting for future liabilities. Does GE have its arms around that business?
Yes. We have taken steps in the last year or so to bring in new talent to manage the operation. We have gone through a robust process with respect to the loss recognition test and the processes we go through to estimate the liability. And as part of our normal course of operations, we're going to be performing a current loss recognition test in the third quarter, which is a normal part of GAAP accounting. So I think we do have our arms around the accounting, and I think that the amount at which we state the reserves currently is fair and in accordance with GAAP.
So when this report comes out and says $29 billion in new LTC reserves that GE needs, $18.5 billion that would require cash immediately, you think what?
I think, what is the basis for that